In this video, I'm going to be walking you guys through the Ultimate Beginner's Blueprint to Trading Part 2. If you've not watched Part 1, use this link that's going to be popping up right here to go watch Part 1, where we did justice to a lot of basic terminology, platform you'll be needing. Watch that video so you can be able to have good understanding on how to get started in trading in 2025 and even beyond. In this video, I'm going to walk you guys through my hybrid system, and for you to understand what my hybrid system is, there are confluences that we need to break into P for you to understand as a beginner trader. So these are the things I'm going to be covering for today. Today we're going to be talking about the top-down analysis, market structure, break of market structure, and order block. And also we're going to be talking about order block, liquidity, which is LQD, liquidity, and POI, point of interest. So with that being said, we are on the daily time frame, Euro JPY, and this is a trading view. So what is top-down analysis? So using time to understand what the market is doing is what we call a top-down analysis. For example, this is a weekly time frame, this is a daily time frame. Here at the up corner of my screen, this is a 4-hour time frame, 1-hour time frame, 30-minute time frame. So all this time frame represent what the market is doing currently. On the daily time frame, each candlestick right here represents an action of one whole day. If I can go on the 4-hour time frame, each candlestick on the 4-hour time frame represents action of 4 hours. This is the simplicity of time frame. So on the top-down analysis, you need to understand on the higher time frame what the market is doing. So on the higher time frame, like a daily time frame, we can be able to see that the market is currently trending. So when price is moving ahead, ascending, moving forward, going bullish, it means that your base currency is having strength against your code currency. When the market is moving downward, it means that your code currency is having strength against your base currency at that time in point. Understanding base or code currency, you need to use this link to go watch the first video so you understand what are base currency and what are code currency. So now we understood that on the daily time frame, price is currently bullish. It means that what? The euro is having strength, which is your base currency is having strength against your code currency. That is why price is moving ahead. That is why price is currently bullish. Okay, understanding this, the next thing I'm going to be looking out for is market structure. So market structure is when price is making series of highs and lows in the market. This is what I mean. The market is making low. What is this? This is a low. What is this? This is a high. What is this? These are lows. What is this? This is a high. This is a high. This is a low. And the market is currently making another probably making highs right here. So for you to understand what market structure is, when the market is making series of highs and lows, it means that at the upside, which is on the uptrend, here, anything above here is considered to be H, which is higher high, and anything below here is considered to be HL, which is higher lows. Okay, so this side right here is called what? A higher high. This is a higher high. This is a higher high. This is a higher high. At the bottom is called what? Higher low, higher low, higher low. You get. This is how you can be able to replicate this thing when the market is dropping. So can we see any example when the market is dropping right now? This is when the market is dropping. So once the market is descending, dropping, it means that your code currency is having strength against your base currency, and anything above it is called a higher low, higher low, higher low, and anything below it is called a lower low, lower low, lower low, lower low, so on and so forth. But when the market is trending, when the market is bullish, it means that we're going to have series of higher highs, higher low, higher highs, because they are more higher than this previous one right here. I believe that's clear enough. I believe that is clear enough. So since we'll be able to understand what market structure is, let's go down to break of market structure. Break of market structure is when price take out the previous high or lows in the market. This is what I mean. Since we'll be able to understand in our first definition that this is a high in the market, whenever markets take out this high, it means that market has broken structure. Okay, this is what it means. This is a high in the market, right? So now let's mark it. This is a high in the market. So whenever price pushed up and take out this high, it means that price has broken structure to the upside. So this is what they call break of structure. So this is it. Whenever price take out this high, it means that we have a break of structure. Okay, so now let's play this stuff. So we can see that price has broken the previous high. So now this is confirmed to be a break of structure. Okay, this is confirmed to be a break of structure. Should we do another example, or you guys understand what break of structure is right now? So now let's go on another example. So since price has taken out this high, it is considered to be a break of structure. Okay, now let's move ahead. Let's see if price is going to take out this high. Let's move on. We can clearly see that price take out that high. So this is what we call market has broken structure to the upside. This is a break of structure. So now after you've understand what break of structure is, let's move down to what we call order blocks. Order blocks is the last bullish or bearish candle before an impulsive move to the upside. What do I mean that order block is the last bullish or bearish candle before an impulsive move to the upside? We knew that market has broken structure right here. So where did that movement started? We remember that price was here initially and price pushed up to take out the previous high. So where is that region that market starts moving to the upside? Where is that region? Obviously is this down candles here. So your order block happens to be the last bullish candle or bearish candle before an impulsive move to the upside. So this is an impulsive move to the upside. So this black candle is a bearish candle. This is the last bearish candle before price start moving to the upside that breaks structure to your left hand side. This is what we call an order block. Do I make sense, or should we take another example? So now let's take another example on order block. Okay, so now price has created a high. Price has created a high right now. Okay, so now let's see if price can be able to take out this high. The price happens to take out the previous high. So this is what a break of structure. Okay, so after having this break of structure, where is that last candle that printed before price starts moving ahead to break structure? It's just like we identified that this is the last candle, this bearish one was the last candle that printed before price start moving to the upside that break structure. Now where is the last candle right here that printed before price start moving to the upside? Obviously this is a candle, this one. Remember we're on the daily time frame, that is why it's more bigger like this. So this is the last candle that printed before price start moving to the upside. So this happens to be your order block. You get, this happens to be your order block. I don't know if you understand what order block is right now. Let's go back to the first example. So on the first example right now, we say that order block is the last bullish or bearish candle before an impulsive move to the upside that breaks structure. It must break structure. Okay, so this black candle, let me zoom out. This black candle happens to be the last candle that printed before this bullish candle start moving to the upside to break structure. So this is considered to be a order block. I believe that's clear enough. If that's clear enough, let's move down to liquidity. Liquidity sits at each highs and lows of the markets. Liquidity sits at each highs and lows in the market, and liquidity have to be grabbed before price can be able to move either to the upside or to the downside. See liquidity in the market as fuel in a vehicle. A vehicle needs a fuel for it to move extremely fast. The market needs liquidity for it to move extremely fast. You're able to see liquidity at each highs or lows in the market. So now this is a low in the markets. This is a low in the market. All these lows that you see right here, there is liquidity sitting here. All these lows and highs in the market, these are places that liquidity is being seated at. So liquidity have to be grabbed before the market will push to the upside. Let me give you an example of that. This low now happens to be liquidity. This low happens to be liquidity. So liquidity have to be grabbed. This low have to be grabbed, have to be taken out. Again, have to be taken out, which is this dollar sign. Is called liquidity. Liquidity is your money. Your money is your stop loss. You get, so this is your liquidity. So price have to come back move up, take out your liquidity, take out the liquidity in the market, take out people's stop losses in market, take out people money in the market before price can start moving ahead. Just like a vehicle need fuel before it can be able to move very, very fast. I believe that's clear. So this is the liquidity. So now want price to take out this liquidity before we can see a push to the upside. So this is it. Can you see that price push to the upside? So now people that were buying right now, they kept their stop losses below here. Again, let's zoom out. So people that they are buying, they kept their stop losses below here, and price is moving to the upside. So now they are happy. They are taking screenshots on Snapchat, on Instagram, telling people that I'm the boss right now. So when market want to manipulate them, you're going to see that we're going to have a bearish movement that will take out a lot of people's stop losses, a lot of people money before price start moving to the upside. And you'll be like, oh, I knew that price is going to move to the upside. It's because you don't understand what liquidity is in the market. So now let's go and see what's going to happen in the market. We can see how markets came back and take out this liquidity here, liquidate all the people that kept their stop losses below here, and you see how aggressive the market will start moving to the upside. So you can see how aggressive the markets pull up to the upside, and you've been liquidated and your money is gone, but the price keep moving to the direction that you first anticipated on. So when you understand what liquidity is, you're going to be avoiding all these things. Okay, so now I believe that this gives you a very good understanding what liquidity is. Let me know if you understand what liquidity is in the comment section. Let's go on to POI. So POI is your point of interest. It is where you need to enter so you don't get liquidated like other guys that will keep their stop losses right here. So understanding point of interest, you need to understand that there should be a precise place that you're going to be getting into the market so you don't get liquidated, just like this guy that got liquidated right here. So how are we going to fetch out your POI? So talking about the POI, I just got the chart back so we can be able to replay it so you understand this thing in details. Okay, so talking about POI, so where is our checklist? This is it. So talking about POI, which is your point of interest, your point of interest should be a defined and a precise place for you to get into the market so you don't get liquidated. Remember what we talked about liquidity. Liquidity sits at each highs and lows in the market. So now we want to buy the market, and this was the last low that the price created. So this happens to be liquidity. Liquidity sits at each highs and lows in the market. Okay, your order block have to be below your liquidity. So this is the last bullish candle, the last candle that printed before. This was the last candle that printed. This blue candle was the last candle that printed before an impulsive move to the upside that breaks structure to the left hand side. So this was the break of structure that we had. You get? So this was the break of structure that we had. This is your order block. Remember what we talked about? Order block is the last candle before an impulsive move that breaks structure, right? And this low is your liquidity. Remember we talked about liquidity. Liquidity sits at each highs and lows in the market. So this is a liquidity. It's sitting at a low. You get? So this order block happens to be your POI, your point of interest, which is a precise, sorry about that, has to be your point of interest, which is a precise place for you to get into the market. Okay, so now this region inside this box is called your POI, your point of interest. So all you have to do, you have to come to the left corner of your screen, pick out your long function and set it here. So this up right here is your entry, this down right here is called your stop loss, and this up right here is called your take profit. Okay, it's called your take profit. So now after having something like this, remember that we talked about liquidity. So we are understanding what liquidity is. The liquidity sits at each lows or highs in the market. So this is a low, the last low that the market created, and this is the last high that the market created. So you can clearly see that market is going to take out this high, it's going to liquidate this high and liquidate this low, then price will start moving to the upside. Okay, so this is what it means. This is your POI, right? We talked about POI, that POI is your point of interest, and POI have to be below your liquidity. So now let's move on. So you can clearly see how market came back precisely and mitigate your order, take you in and liquidate those people that bought earlier right here it took them out, and now you're in the market. Price mitigates your POI, take out your liquidity, and you can clearly see that price will move very, very crazily ahead. So now let's continue. You can clearly see what happened. So you just have a take profit right here. So remember what I said, that price is going to take out this liquidity and this liquidity. So price liquidates these orders that were sitting down here, liquidate them, take out all their stop losses, move to the upside and take out all the people that were selling right here. So I don't know if you understand what I'm trying to, the message that I'm trying to pass right now. I'm trying to pass these messages. I'm trying to pass top-down analysis, break of market structure, order blocks, liquidity, and POI. If you don't understand what I just explained right now, not to make this video to be any too long, please go back and watch this video and replicate the same thing on your chart. When watching the video, replicating it on your chart, that is when you'll be able to understand all these things in details. So let's go on to the last example before we call this a day. Putting all these things together. Putting all these things together, this is 30 minutes time frame and this is the same Euro JPY. Okay, this was the same trade that I call out on my Telegram community. Use the link in the description down below to go join the Pound Trader Telegram community where we share trade setup for free. If you like understand, just use the link and go check them out, and we send a lot of good trade right there. It's for free, totally free. Okay, so putting all these things together right now, first we do a top-down analysis. You understand that price is moving ahead, price is bullish. Secondly, we understand what market structure is. Market structure is when market keep making highs, higher highs and higher low. Okay, so after understanding those things, then order block is the last candle that pushed up before an impulsive move that breaks structure to the left hand side. Liquidity sits at each highs and lows of the market. POI is your point of interest. So putting all these things together, firstly, let's look on break of market structure. So you can clearly see that price from here pushed up and break structure to the left hand side. So this is called your break of market structure. Okay, so break of structure. Since this move have to be the move that take out your previous high and created a new high, where did market start pushing to the upside? Where was the last candle before price start pushing to the upside? Right here. So obviously we can tell that the last candle that printed, you can use this candle, is too small. Let me zoom out. This is called a doji candle. This candle is too small. You can use this. This cannot serve as your order block because this is a very, very small candle. Okay, so now this is a push to the upside. So this is where price start pushing to the upside. So you can be able to use here as your order block, which is your point of interest, because after this doji candle that is an insignificant candle in the market, after that we saw this price, this candle create a bullish momentum that push price to the upside to break structure. So this happens to be your order block. So after you've marked this thing out, this is where you can consider to be your point of interest. This is where you are interested in, waiting for markets to come back to this region, then you take your buy. And where is our liquidity sitting? Remember, we're putting all these things together. Okay, so where is our liquidity sitting? Remember that we say liquidity sits at each highs and lows of the market. Okay, so this is a high in the market, this is a high in the market, these are lows in the market, this is low, this is another low in the market. So where is your liquidity? Your liquidity usually sits at every lows and highs of the market. Just like I'm repeating all these things, I just want you guys to understand, because I'm dealing with a lot of newbies. You mark here this low with this one to be your liquidity. So everything above here, from this low to this low, everything here is liquidity. So you don't want to be participating around here. If not, you're going to be getting liquidated. So now there are a lot of people that trade a double bottom. So this is a double bottom right here, right? So they will trade it and want price to move up. Yes, price did move up, but what happened? This is a liquidity in the markets, and this is how price came back aggressively, take out all the people that were selling around, buying around here, stop them out, and you see how price will move to the upside very, very aggressively. And this is your POI. So you can clearly see that we've put all these things together. Okay, the first thing we talked about We talked about your break of market structure, which is here, this impulsive move that breaks structure. We talked about your order block, which is the last bullish candle here that push price to the upside. We talked about your liquidity, which is this red line right here. Everything above this red line is called your liquidity, which market have to take out before price start moving to the upside. After then, we have our POY, which is our point of interest. So this is where you'll be interested to buy the market here and put your stop loss below the previous low, which is below the order block low. You keep your stop losses here. Remember, we talked about stop loss, your predetermined loss in the market. Use this link to go watch that video, guys. Your predetermined loss and your predetermined profits. This is your predetermined profits, sorry, and this is your predetermined loss. Okay, so this is how price move crazily in the market. You can see that this entry is not just a random guessed entry. This is a precise entry in the market. You're risking $100, you'll be making $400 on this trade, and this is the same trade that I sent out to the Telegram community. I'll leave a screenshot of that trade that we took right here for you to be able to understand that yes, we did take this trade using all these confluences together. You're not understanding what we're saying right now, guys. Please go watch this video again so you can be able to have a good glimpse. I know I've done a lot of justice putting all these things together. It is not just easy. I'm really tired. I believe this is going to be the final lap on this video. Everyone, please support, share this video to people who want to have precise entry like this. I want to know what the market is doing. I want to start trading forex in 2025 and even beyond. Please recommend this video and this channel to such people. With that being said, bye for now. See you in the next video.